Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh, and over the next 1 hour, me and Priyanka Uppal will be taking you through news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar and tell you what the brokerages are saying as well. But first things first, let's take a look at the top story of the hour coming in from the political landscape then. And after weeks of intense political contests, it's curtains down on the assembly elections in Maharashtra and Jharkhand. The results for both states will be counted on November 23rd, that is this Saturday. Even as Bollywood stars, India Inc. honchos and sports persons stepped out to vote, Mumbai reported the lowest turnout at 49%. However, Maharashtra reported the highest turnout in 30 years, over 65%. Jharkhand, meanwhile, saw a turnout of over 68%, and now exit polls are also giving the Mahayuti an edge in Maharashtra as well. Majority of the pollsters are backing the alliance of Shiv Sena Shinde faction, BJP and NCP to emerge victorious, albeit by a small margin, projecting Mahayuti to win 151 seats in the 288-seat assembly, just 7 seats more than the halfway mark. While pan-India pollsters are also backing the ruling alliance, regional pollsters, though, have given an edge to Maha Vikas Aghadi. Now, if we thought Maharashtra is going down to the wire, then Jharkhand is going to surprise us even more, because the crux of exit polls is that it is a neck-and-neck fight between BJP and the JMM Congress alliance. Now, pollsters have given the slightest of edge to the India bloc, who are predicted to win 39 seats in the 81-seat assembly. Now, the BJP is expected to be a close second with 38 seats as well. That makes the independents projected to win 4 seats. As the ultimate kingmakers, let's also unpack all of these numbers and the high-stakes political battle in these two states with Madhav Gopalakrishnan of the Times Network, who's standing by with more updates. Madhav?
Well, if you look at the kind of predictions that have been made as far as exit polls are concerned, many scenarios had been predicted before the exit poll. People were predicting it to be down to the wire. There were those who were saying that there could be a hung assembly. That's even a possibility. But if one goes by the exit polls for both Jharkhand and Maharashtra, there appear to be close and clear trends. Of course, the election is close when it comes to Maharashtra, because there's so many different factors, 6 parties that are in the play, and a number of issues that have been brought up. But if you analyze the exit poll, then what could potentially be happening is that the BJP-led alliance could perhaps be the one that would be forming the government. At least this is going strictly by the exit poll numbers once again. There are, of course, all sorts of exit polls. There are some that have given a range of as high as plus minus 30, which means that the actual range that they've predicted is 60 seats, which is a very, very wide range. But nevertheless, what are the factors that have perhaps helped, this time around the Mahayuti? One is, of course, the schemes that have worked on ground. The Ladki Behin Yojana is something that even when I was on ground and I spoke to a number of women, they felt that they have benefited about 18,000 crores at last count that was distributed. As far as that particular scheme is concerned, other schemes that were announced, whether it is old age pension, whether it's schemes for farmers, all of that also somewhere or the other seems to have helped the perception as far as the Mahayuti is concerned. The other important factors with Jarange Patil calling off his protest, whether that Maratha anger really seeped in on ground and whether it really worked is a very, very important question. Judging by the numbers, it doesn't really seem to have happened. However, if that is a factor, then the numbers and the outcomes that we could be looking at could potentially be quite different. The third and perhaps the most important factor that didn't work, for the BJP as far as the Lok Sabha poll is concerned, which they hope is a gap that they've plugged this time round, is the RSS working solidly for it on ground. And if you look at some of the exit polls, where in Vidarbha region, where the main battleground really was, where this farmer distress, the rural distress is something that was extensively spoken about, it appears to have changed the fortunes of the BJP alliance in that particular region of Maharashtra as well. If I'm going to come to Jharkhand, in Jharkhand as well, it appears to be advantage for the BJP alliance. That's what most of the exit polls are predicting, except for maybe one or two which have predicted a result the other way. Over there, whether it is, the fact that the JMM, the Congress, perhaps were not on the same page, other alliance partners like the RJD perhaps doing better than the Congress, what really went wrong there on ground? How much has the infiltrator narrative, which was propagated by the BJP, how has that worked on ground, particularly regions such as the Santhal Parganas? Those are going to be important factors as well. The BJP says that has helped it in this particular election. Has that really worked on ground? And has somewhere or the other Hemant Soren's entire campaign of being victimized, of agencies, jailing him, so on and so forth, and misuse of agencies, which has been a narrative of opposition parties, how much has that worked on ground? Judging by these results, that hasn't happened. So these are some of the factors that are at play as far as Maharashtra and Jharkhand underway, and of course the exit polls predicting both the states going for the BJP and its allies. Back to you.
Madhav, thanks very much for that extensive breakdown on that. But then let's listen to some key exit poll reactions also coming in from political fraternity. Even Fadnavis gave a reaction on it.
मुझे ऐसा लगता है कि जब जब वोटिंग परसेंटेज बढ़ता है तो बीजेपी को ही उसका फ़ायदा होता है। तो मैं ऐसा मानता हूँ कि निश्चित रूप से ये जो बढ़ा हुआ वोटिंग परसेंटेज है, ये बीजेपी और हमारे अलायंस के लिए, महायुति के लिए ये फ़ायदा हमको देगा और इसका फ़ायदा हमको होगा।
देखिए, एग्जिट पोल्स जो है, एग्जिट पोल्स है, एग्जैक्ट पोल्स नहीं। आप उदाहरण के तौर पे हरियाणा लीजिए, उदाहरण के तौर पे लोकसभा के इलेक्शंस कभी भी एग्जैक्ट नहीं हुआ। तो कहीं ना कहीं सभी चार वर्ग, महिला, युवा, बुजुर्ग और लाभार्थी, सभी को बेनिफिट हुआ है और उन्होंने देखा है कि ये सिर्फ प्रगति की सरकार है।
मुझे यकीन है कि इस इलेक्शन में महायुति सरकार को और एक बार सत्ता में आएगी, एक हैट्रिक मिलने जा रही है। देखिए, एग्जिट पोल्स के बारे में मैं कभी ध्यान नहीं देता हूं, और मेरे अतीत में भी मैंने कभी भी एग्जिट पोल्स को सीरियसली नहीं लिया, चाहे हमारे फेवर में हो या हमारे अगेंस्ट में। जनता की जो इच्छा है, जनता के आंखों में कैंपेन के दौरान आप जो फीडबैक देखते हैं, वो एग्जिट पोल और एग्जिट पोलस्टर्स से
महिला जो ठान लेती है वो करके दिखाती है। इस चुनाव में महिलाओं ने, झारखंड की महिलाओं ने ठान लिया है कि बदलाव करेंगे। यहाँ पर जो रोटी बेटी और माटी की सवाल है, तो इसके लिए सब आगे आए। हम एक रहेंगे, साथ रहेंगे, तभी सेफ रहेंगे। ये संकल्प के साथ सभी चल रहे हैं और आने वाले 23 तारीख को जब रिजल्ट निकलेगा तो हम सभी देखेंगे ही कि इस तरह से बदलाव का जो मूड लेकर के सब आगे बढ़े हैं, तो कितनी बड़ी बदलाव होती है और उस दिन हम लोग को देखने के लिए मिलेगा।
झारखंड में हमसे बड़ा सर्वेयर कौन हो सकता है? 3 महीने से लगातार झारखंड में है। जनता की आंखों में परिवर्तन की ललक देखी है। मैं पूर्ण विश्वास के साथ कह रहा हूं, झारखंड की तस्वीर और तकदीर बदलने के लिए जनता ने भारतीय जनता पार्टी एनडीए को वोट किया है और शानदार बहुमत प्राप्त करके हम सरकार बनाने जा रहे हैं।
All right, and there you go. That's the verdict coming in. That's the word coming in fact, from the who's who of the political landscape from Maharashtra as well as Jharkhand. Well, Priyanka, what does really stand out to me is that maximum city had the lowest minimum voter turnout. That is something that we saw that was important. But November 23rd is when the counting is going to happen, and we'll see that verdict emerge. But for now, let's take a very quick breather on the show. When we come back, we'll take a look at how the US markets are faring. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates. And as promised, let's get you a check coming in on the Wall Street and what that really did. It was a mixed day of trade largely on Wall Street, with the S&P 500 ending near flat. Now, the Dow's the one that's jumped nearly 140 points, while the Nasdaq Composite is the one that ticked down just 0.1% thereabout. Now, with more than half of the trading week now in the rearview mirror, you do have Dow that is on track to underperform, at least as of now though. But traders, of course, will be watching out on Thursday for economic data on jobless claims as well as existing home sales data. there's a host of commentary coming in that we're watching out for. So Cleveland Federal Reserve President Beth Hammack, Chicago Fed President Austin Goolsbee, Kansas City Fed President Jeff Schmidt are also expected to give remarks throughout the day. So that is an important set of commentary coming in from a host of those Fed Reserve officials as well. But on the corporate earnings front, then investors will also be passing reports from Gap as well as Intuit expected after the market closes. And speaking of reports, then investors, of course, kept a close eye on after the bell earnings from Nvidia, the AI darling chip maker that has dazzled Wall Street for more than a year as a key AI beneficiary as well. More on that later. But yes, mixed day of trade, lots of important commentary for the Wall Street to take cues from this week, Priyanka.
Absolutely. In fact, if you look at other cues also, in fact, dollar index, that one is inching up higher. It's now more than 106.5 in fact. And in fact, 10-year yield, that one also gained by 2 BPS point to settle at 4.4%. A lot of cues coming in from geopolitical front also. But then on the front of crude price settled lower at $73.08 on Wednesday. And this was especially after the US crude and gasoline stocks rose by more than expected last week. But the losses were also capped by worries about the intensifying war between major oil producer Russia and Ukraine. Now, Brent crude futures for January has settled down by 50 cents to nearly to $72.81 per barrel, whereas US West Texas, that crude futures for December expired on Wednesday, and that settled down by 52 cents or nearly 0.75% at $68.87 per barrel. In fact, the kind of tension that we've seen on geopolitical front, gold has gained for third straight day. That was bolstered by rising demand for safe haven. Of course, the yellow metal settled at $2656 per ounce. And let's not forget that Bitcoin, which is, of course, inching higher. It's at all-time high, going post 94,000 mark. But then moving on, let's get you some cues from Asian market also. Looks like that we're getting a weak sort of cues coming in from Asian markets. All markets mostly fell. In fact, if you talk about, we get Nikkei is down by 0.7%. 0.75%, and similar is the situation looking like from other markets also. Talking about Kospi and topics also, we're not getting very strong cues from therein. Though the Nifty implied, GIFT Nifty is indicating a good start today. Kospi is down by more than 0.5%. Talking about topics, let's get you that one also on screen. So mixed cues coming in from US, but then Asia, we're getting a weak sort of cues coming in from Asia. Hang Seng, though, has now recovered to show up in the green. It's marginally up. But then mostly the markets are giving you weak start. But US market, but Indian market, GIFT Nifty, as far as that is one is concerned, it's giving you a good start. Looks like we are up by 48 points.
Well, absolutely. Just Kospi and Hang Seng are the ones clutching on to that shade of green at this point. Not penciling in a great start for us as of now, at least. But let's also take a look at the key events that you should then be watching out for from India. You do have SEBI's new F&O guidelines that will be kicking off. So that is something to keep an eye on. And from the US, there's initial jobless claims data to watch out for. And from the Eurozone, consumer confidence data is going to be in focus as well. In terms of global earnings, you do have Baidu as well as on the IPO watch. Then on the primary market front back home, BlackBuck IPO listing is also something that we're really watching out for. So those are largely all the kind of events that we're watching out for, Priyanka.
All right, but then there were a lot of key comments which is coming from Fed officials. Let's get you some of them. US Federal Reserve officials did make some comments. Governor Michelle Bowman, he's sounding the alarm on inflation, saying it's still the top economic concern. Despite recent rate cuts, Bowman believes prices are rising too fast and the Fed should not cut rates until inflation meets the 2% target. However, other Fed officials like Susan Collins and Lisa Cook, they think more rate cuts are on the horizon as inflation cools and the labor market remains robust. Collins emphasized the Fed's shift towards a more neutral monetary stance. With inflation pressures easing, the Fed is expected to move away from its restrictive policy to align better with the economic environment. Cook also mentioned that wages as well as the job market are cooling and excess inflation is largely confined to housing space now.
Right, some important commentary coming in from US Federal Reserve officials, more commentary that is on the deck as well. But moving on then, Nvidia's AI-driven boom continues. The chip maker crushed expectations in the third quarter with revenue soaring 94% on a year-over-year basis to $35 billion, fueled by demand for its next-gen Blackwell AI chips from big names the likes of Microsoft as well as OpenAI. The company also expects the fourth quarter sales to surpass $37 billion, implying a 70% growth coming in those sales. However, you did have shares dipping in after-hours trading on valuation as well as future growth visibility concerns.
Okay, keeping it with the earning only, it's a tale of two retail giants now heading in opposite directions. Now, Walmart, that one has hit an all-time high after reporting strong quarterly numbers with same-store sales up 5.3%, and even the e-commerce business, that one has surged by 22%. The retailer is gaining traction with higher income shoppers as well as non-grocery sales. Now, this one prompts it to raise its full-year forecast. However, Target, that one tumbled to a 52-week low after missing earning expectation, cutting its outlook. Target blamed cautious consumers, inflation fatigue, and even the higher costs.
Alright, then moving on. Meanwhile, Europe's auto industry is facing a crisis as Ford and Volkswagen announced sweeping measures to cut costs. Ford plans to slash 4,000 jobs in Germany and the UK, blaming weak EV demand, limited government support and competition also from subsidized Chinese rivals. Meanwhile, you do also have Volkswagen workers that have offered $1.6 billion in concessions to avoid factory closures, but tensions are high as management considers deeper cuts to stay competitive.
Okay, but then now let's get you the action-packed power pack lineup that we have for you to talk about the Battle of States. We speak to Swaminathan Iyer, who's a consulting editor of ET Now at 8:30. We get you his views on the two states and the kind of the political conclusion what we can draw from this. At 9:20, we speak to Mihir Vora, who's the CIO for Trust Mutual Fund. At 9:30, we get here commodity roundup with Rakesh Arora, who's the founder for Go India Advisors. Commodity volatility to say high. We've seen the base metal surging last week also. At 9:40, we speak to Mishra Dhatu Nigam SK Jha, who's a CMT for the company, on their growth roadmap. At 9:50, we speak to Muthoot Finance. We would have George Alexander Muthoot, MD of the company, at 9:50 to talk about the gold loan surging and even the growth roadmap. At 10 a.m., we get your special conversation with Rhythm Desai from Morgan Stanley on India's roadmap, outlook, and FI's actions, especially for India.
All right, then that's a power-packed lineup for you right there on the market.
Welcome back. You're watching Market Cafe on ET Now. Now let's get you some stock-specific news. Alpha Wave Global has agreed to pick up stake in UPL subsidiary Advanta for $350 million. Swamit is here with more details on the stake sale. Swamit, of course, the experts are viewing this as a re-rating move for UPL. Break down the shareholding pattern for Advanta for us post this deal.
Well, the bigger news that has come in for UPL is the fact that they will be selling their 8.93% stake in Advanta, which is one of the key subsidiaries of UPL, to Alpha Wave for around $250 million. Now, apart from this, Alpha Wave will also invest additional $100 million in the company, that is Advanta, for additional 3.51% stake, which means that Alpha Wave's entire shareholding in Advanta would be close to around 12.44% for around $350 million, which they are putting in. Now, this transaction values Advanta at close to $2.8 billion, and in this company, UPL's shareholding will come down to around 74.7%. KKR will own close to 12.86%, while the remaining 12.44% will be owned by Alpha Wave. Now, if you remember, back in October 2022, UPL had sold around 13.33% stake to KKR for close to $300 million. And if you compare that deal valuation with this deal valuation, obviously this deal valuation is done at a higher value. Back in October 2022, Advanta was valued at close to $2.25 million, $2.25 billion, while currently it is being valued at close to $2.8 billion. However, the valuation multiple that has come down. Earlier it was 26 times. This time it's around 23 times for Advanta. Now, Advanta generates around $120 million of annual EBITDA, which is nearly 15% of UPL's consolidated EBITDA, and this deal will help deleverage UPL's balance sheet. The debt currently stands at close to $3.3 billion, and this deal valuation is also done at a much higher valuation compared to what currently UPL is trading, which is close to around 8 times, which is the 12-month forward EV to EBITDA. However, on the negative side, this deal also means that the IPO plans of Advanta could now be pushed much further, because earlier back in April 2024 there was news reports which suggested that the company is looking for an IPO of Advanta in early 2025, and the IPO was valued at close to $4 billion. So compared to that valuation, this transaction is done at a much cheaper discount of around 2.8 billion. So that is on the negative side coming in from this deal.
Well, absolutely, Soumik. But while you're with us, UPL has also announced plans to raise up to 3,378 crore rupees via a rights issue at 360 rupees per share. Can you please shed a little more light on this then?
Well, yes, a $400 million rights issue is what UPL has also announced. They had already taken a board approval, but they have announced now the opening of this rights issue. The rights issue has been priced at close to 360, which is at a discount of nearly 34% compared to the current market price. And the ratio is for every 8 shares held by any shareholder in UPL, they will get one rights issue share entitlement. Now, the record date for this rights issue is November 26, which means that the last day to apply or to buy UPL shares to be eligible for this rights issue is November 25th. Now, the rights issue will open on December 5th and will remain open till December 17th. Now, if one is eligible for this rights issue, then they will get the rights entitlement credited to their account on December 4th, and the trading for this rights entitlement will also start from December 5th, and the last day to sell this rights entitlement would be December 11th. Now, what is a rights entitlement? Rights entitlement is a temporary credit of shares. Investors can either choose to keep the RE and subscribe to the rights issue, or they can even choose to sell this rights entitlement in the market and give the entitlement to someone else to subscribe to the rights issue. Now, what can existing investors or old investors do in case they are holding shares of UPL? Now, assuming one has 8 shares, they will be entitled to one rights issue shares, and the estimated rights entitlement price is close to around 186 rupees, which means that the dividend per share for any investor could be around 23.25 per share, which is the highest ever announced by so far. UPL has never announced such a high dividend, so they should go ahead and sell this rights entitlement, given the fact that if they choose to keep the rights entitlement, there is too much of hassle. They need to keep a track of payment dates, and they also need to make payment for the rights issue amount, and if they fail to do that, then the rights issue will be forfeited to someone else. Now, what should new investors do in this rights issue case? There is no trading opportunity as such, given the fact that the entitlement ratio is not too much in favor, which means that you spend a lot more to buy UPL shares rather than compared to what you will get post selling the shares. One will in fact incur a loss if they buy fresh UPL shares at current price for arbitrage. However, there is a possibility of gain only if the share prices of UPL fall up to the record date of the rights issue, and if the RE lists at a minimum premium of around 10% compared to the estimated price currently that we have of around 186 rupees.
All right. Thanks very much, Amit, for explaining that mathematics also. Well, that's the news, but then surely looks like there could be some action, some movement in UPL basis this news, as experts see is a re-rating move for UPL. Moving on, the slack in economic activities in the September quarter is behind, and the medium-term outlook remains bullish. This is as per the country's innate strength sets itself. RBI, Reserve Bank of India bulletin, that these comments come in from the bulletin which was released on Wednesday. Ankur Mishra joins in with more highlights on this. Ankur.
Yes, important updates coming from Reserve Bank of India's bulletin, where it talks about global economy which remains resilient despite fragile confidence and rising protectionism. India rebounds as private consumption drives the domestic demand, that has been detailed in the bulletin, and also the festival spending boost is the real activity which has been mentioned in the bulletin. Now, the bulletin also talks about the inflation, which has been a cause of concern, which has been something which Reserve Bank has been watching out for before taking any action on the rate front. Remember, Governor has specifically mentioned that it will use all sort of animals to tame inflation, to take it towards the target, which is 4%. But the latest October month's data suggested that it has crossed 6.2%, which is above the tolerance band of Reserve Bank of India. Now, the important commentary which is coming in the Reserve Bank of India bulletin, it says that food price momentum and the core inflation push CPI inflation higher in October 2024. Now, all eyes will be there on the policy which is set to be released next month by Reserve Bank of India. But before that, important commentary which suggests that India remains resilient amid the pressure which has been surmounting. However, the global activity, the global economic scenario is also improving.
All right, thanks Ankur for that update coming along. Then moving on, then is there more to the current sell-off, and when will Indian equities then manage to scale a rebound? We caught up with a whole host of experts on what they really make of the current moves. Here are views coming from the likes of Lawrence Belanco, Vineet Sambre, Vetri Subramaniam, as well as A. Balasubramanian then.
We've seen hesitation across the rest of the world as far as that EM versus DM ratio. It has slowed the downside, or the underperformance in relative terms has slowed, but we've got no evidence of a major base and re-rating yet. And part of that is due to the dollar strength that you've seen since late September, basically. Not seeing any evidence of the 200-day holding and providing a tradable entry point. The next target we have is down at the 22,800 area. But like the test of the 200-day yesterday, if we don't see any evidence from our momentum indicators, is that we think that the risks will still remain to the downside. So, as price action sits right now, I think investors have to be patient and let this corrective run its course rather than trying to sort of catch that falling knife. We haven't seen that slow to provide an opportunity at this point in time.
The remainder of the period for FY25, the capex is likely to move up, which is, I think, going to be a significant, let's say if it happens, if that is going to be a significant trigger for the markets going forward. That is number one. Number two, one has to see that the festival season actually started post the end of the quarter, which is in the month of October. So I think the demand outlook also, the visibility of that should also maybe sort of, be visible over the coming quarters and the next or the next 2 quarters. So I would say that from the perspective of the markets seeing some directions, it is important to look at the following quarter, the coming quarters. And I think once the visibility there improves, I think the markets should sort of get some strength back is my thought.
I think I'm positive about the longer term trajectory of what the Indian economy is doing, of what companies are doing, and therefore what the markets can do. But to make money in equities, you've got to get your asset allocation right. And the price at which you buy is important in terms of the returns that you can earn. So I'm sure that when the valuations turn right, that will be the time for one to go in.
For the portfolio allocation, especially for global investors, I think probably they must be doing a shift in the portfolio allocation from emerging market back to US and so on and so forth. I think current dynamics is on the back of that. When the markets continue to rise, there are always question marks which all of us used to have about to what extent the market rally can sustain. Given the fact valuation is getting stretched, it is getting overvalued. Now the markets are trading above the long-term average by substantial margin. So the people are expecting some kind of selling pressure to come. Unfortunately, the current selling pressure which has come, as you rightly mentioned, companies which have done very well, even a normal growth they are given, they got rewarded or maybe they remain flat. Wherever there has been a bit of slowdown, like auto if you see, the moment we saw actually some bit of slowdown, and the excess valuation got created, that got corrected. Which in my view is healthy for the market point of view, longer term point of view, is very healthy. I think the drivers of the economic growth continues to remain good. It's not, nothing is changing. Fundamental continues to remain very, very strong.
All right, so these were the views from the market masters. But we stay for a short break here. More to come on the other side of the break. We get you all the buzzing stocks as well as the brokerage notes. Don't go anywhere. Welcome back. You're watching Market Cafe on ET now. Now, let's get you some stock-specific action also, especially the brokerage side. BofA has downgraded Nykaa to underperform from neutral rating. They've also cut the target price. Varun is there to give us more details on the same. Varun, off late, a lot many brokerages are covering Nykaa. We remember Jeffrey's report, but BofA is sounding very cautious here.
Definitely, they are very cautious and actually they have downgraded the stock. So they have downgraded it to underperform from neutral and cut the price target from 225 to 150. So basically, they see a downside to the consensus estimate, especially on the margin front, because they say the pace of margin improvement, especially in the BPC segment, is going to be slower than the market expectation. Also, the quick commerce uptake in the urban areas, this will impact Nykaa's revenue momentum. And they also expect the apparel industry growth to be a bit subdued, and the new competitors entering the market would be a challenge for Nykaa. That's what they say. And they cut the EPS estimate for FY25 to 27 by 11 to 41% post the Q2 earnings, and also reduced the EV by gross profit multiple target from 15 to 10 times. Also, BofA says that the company is going to enter the F&O segment from 29 November, and this could increase the overall volatility in the stock price, and hence they have downgraded the stock. So the stock is already down 60 rupees from its 52-week high of 230, and now BofA sees more 20 rupees downside on Nykaa.
Well, absolutely. Thanks, Varun, for that update coming along. Then let's also go across to Ansh, who's standing by with the futures and options roundup then. Ansh?
Yes, let's start with FIS first. If you see the chart as well, we are seeing that they have added around 1,800 contract, but they have covered around 24,476 contract on short side, which is a positive sign. With this, the total long position is at 25%, and they have been in this 20% from start of November, indicating they have been consolidating around this level. Now, if we talk about Nifty, the Nifty fell by over 200 points of days high in the previous session, but it managed to close in green, snapping 7-session losing streak, which is a positive sign. Also on chart, the index has been hovering around this 200 DMA from last 4 consecutive sessions, indicating consolidation in this index as well. Also, if we check our index option, then we are seeing most active call writing happening at 23,800, indicating a resistance around this level, whereas on downside we are seeing a put unwinding happening at 23,500 strike. Talking about Nifty Bank, we are seeing some positive here because Nifty Bank has been advancing from last 3 consecutive sessions. In index future also, we saw open interest dropping by around 5%, indicating short covering, which is a very positive sign. Also on option front, we are seeing high call total interest open interest at 51,000 level. Also, if we talk about few stocks in focus, then we are seeing short build-up happening in Max Financial, SBI Life and Bajaj Finserv, which are FinNifty stocks. So keep an eye on these stocks.
Thanks very much. So looks like FI's positioning remains same. They've added more of short contracts, but a little short covering trend, which we could see for today, being the expiry trade today. Thanks very much, Ansh, for all that roundup. Now, Junaid is joining us with the list of stock that could be buzzing in trade today. Junaid?
Well, definitely. Let's start with Dr. Reddy's Laboratories as the company. The US FDA has actually completed a GMP inspection as an API facility of the company situated in Hyderabad. They have issued Form 83 with 7 observations. Also, Tata Power will be in focus as the company has forged an partnership with Bhutan's Druk Green Power Corporation. This is to develop 5,000 megawatts of clean energy project in the landmark regional collaboration. Along with that, also watch out for Indus Towers as the company has won a favorable order from the Supreme Court. This is will result into a reduction of contingent liability worth about 3,704 crores. So it's a big news. Expecting an action around Indus Towers today. Also, Aegis Logistics will be in focus as Aegis Vopec Terminals, which is a subsidiary of the company, has filed DRHP for an IPO. The IPO shall comprise of a fresh issue amounting to an aggregate amount of up to 3,500 crores. Also, NLC India, the board has approved investment of about 3,720 crores into NLC India Renewables Limited. Godrej Properties will be in focus as the company has acquired 53 acres land in Kolkata, which is expected to have a sales potential of about 500 crores. And on the back of order wins, BEML has won an order worth about 250 crores for 48 rare dump trucks. Also, GRSE, who have won order about 226 crores for hybrid electric ferries from government of West Bengal.
Junaid, for getting us that list of stocks that are likely to be buzzing on account of news flow. But while you're with us, also tell us which are the counters then that make it to brokerage radar bright and early this morning.
Well, definitely. Let's start up with Paytm. We have a note by Bernstein who have maintained the outperformance rating and have hiked the target price to 1,000 rupees from earlier target price of 750. Now, what they believe is that the discussion on Paytm has moved from the survival risk to the risk of bull and bear case scenarios. Now, if you look at the bull case scenario, they see the Paytm lending partly from the balance sheet, as well as improvement in their Paytm payment margins. In this case, in the bull case, they see an 100% upside to the EPS from the base case. Now, if you look at the bear case, then they see the payment margins coming under pressure, as well as the disbursal growth to be subdued. And in this bear case, they see a 40% downside to the EPS from their base case estimates. Let's talk about Indian hotels as Morgan Stanley has come up with a report. They are maintaining their overweight rating and have hiked the target price to rupees 759. Now what they believe is that the company, which is South Asia's most profitable hotel chain, is aiming to 2 times to double its revenue by FY30, also improve its ROC with more than 20%. Now they say that this margin expansion will expand the complete cycle of the company. Also the rising ROC will support the premium multiples for the company. Also, lastly, let's talk about Eicher Motors. As Goldman Sachs have maintained the buy rating and have hiked the target price to 5,900. Now, the main price hike comes off because of the pickup in launch momentum, which offers an upside potential for the company. Also, they're expecting the pickup in export volumes, with the margins and ASP will be superior to the domestic business.
All right, so these are the couple of stocks which can be impacted because of the brokerage. No, thanks very much, Janae, for highlighting all those stocks. With this, it's a wrap on Market Cafe. GIFT Nifty indicates a positive start, up about 27 points. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.